Yo guys, what's going on? Welcome back to another video, and in this one I'm going to be explaining how I ended up catching $1,000 in 40 minutes trading Nasdaq. Now, in this video I'm going to be explaining how I entered, why I entered, and what was my targets and where I was targeting. So sit back and enjoy. Right, so to start off, what we're going to do is we're going to bring the replay mode up on TradingView here. And we're just going to bring it back to the start of the week, right? So this basically will give you an idea on why I ended up entering the trade, what was the overall narrative, right? So to start off with Nasdaq, as you can see, the price is absolutely pumping to the moon. So there's no indication of selling yet. So why would you start selling, right? So when the week started, this was Friday, the week prior, 18th of July. Now, obviously, I was eyeing up this fair value gap as you have here. We have a daily fair value gap right here. And let's lock that in and let's draw that across, right? So we have this daily fair value gap. If price wants to stay bullish for me at the start of the week, I'm going to say that price will have to tap into this and then push higher, right? That is my sort of, the draw on liquidity will always be the high of the last week, because that is what bullish order flow is. We want to, target the highs of the prior weekly candle, and that's the sort of basic thing that we want to target. So going into the start of the week, you see on Monday, immediately took out the highs. However, we still have this daily fair value gap. So I'm waiting for price to sort of turn back into this range and then to push up higher. So then on Wednesday, I believe on Tuesday, so Monday and then Tuesday, price pushed back within this daily fair value gap. I did not take a trade here on Tuesday because I was expecting for price to at least push in and give us that nice reaction back up. But we did get something from here. We did get some sort of bullish move from here. However, I wanted to see if we can take out these highs and push higher, but it just was Tuesday early in the week, so I decided to wait, right? So if we then basically skip a few candles and go over into what we got here, we got Wednesday. You can see that prices end up pushing back up here, and we've created this bearish fair value gap right here. So at this point, I don't want to be buying if price can't break back above here, because yes, fair enough, the trend at the moment is, give me a sec, let me just do this. The trend at the moment on the lower time frame is bearish, however the higher time frame is pointing bullish. You don't want to buy just in case this wants to go and sweep out any of the lows just yet. So I'm going to mark this up and I'll show you what I mean by that. You can see that at the moment the market is pushing to the downside, right? However, on the higher time frame, it's pushing up. So this is how you sort of get in sync with the market and time your entries perfectly. Because what could happen is if this held around this area here, so for example, the price could push down here. However, you've bought around this area here, trying to see if price pushes up, right? But if the market's not ready, it can clearly spike out your entry first and then move up. And then a lot of traders get caught in this sort of area where they're thinking the market's about to reverse and it actually doesn't. So we're still waiting. So my idea and what I'm waiting for is I need price to push above this fair value gap here. Then we will use that as support, and then we will then continue higher, right? This is a change in order flow here, because bearish PD arrays, if you're familiar with ICT, right, like bearish fair value gaps, you can see, look, that one's been respected, that's been respected. What's getting broken? Bullish PD arrays are getting broken. That's a bullish fair value gap which has got ripped straight through, and then it's now being used as support. As you can see, this whole bullish inverted fair value gap, if I mark it up for you guys, is being used as support at this point. There we go. Look, price broke through it, it came back, tapped it, and then price dropped down. So at this point, I'm still a bit cautious on getting into buys. Now, we did have earnings at the end of, I believe was Wednesday, and after market close. So what happened here is this is outside my timing, and immediately at like about PM session 4 PM, you can see that the market absolutely climbed higher. There we go. We got that close above, and that was at 4 PM, right just before market close. I wasn't going to look to trade anything here, but this confirmed that, right, we're getting that reversal now. Price is starting to align with a higher time frame. You can see how it's bounced off this daily fair value gap and is now pushing up. We've now broken and closed above the 1 hour fair value gap. So what does this become? An inverted fair value gap. Okay, this is starting to, connect. Then we've got the drawn liquidity is this high here, right? So if we do a buy side right there, drawn liquidity. However, this is where something comes in and comes into play, which I know a lot of you guys may not use, right? If we look at correlating assets such as S&P or Dow Jones, in this case I'm using ES, sorry, and we go to the same area where we were, which is here. This, as you can see on the right hand side, actually I'll bring it full screen. This here was Monday's high, right? And Wednesday, when the earnings came out on S&P, has already ripped through that high, whereas on Nasdaq we have not taken out this high. This is very heavy S&T, where you can see that the highs are, it's basically a cracking correlation. As you can see that this high over there is over there, and then over on S&P or ES, however you want to call it, you can say that this high is linking with that candle there. Where's the 4 p.m. candle? Right there. There we go. So you can see that is an inverse correlation. These are correlating assets, and they're supposed to work in tandem, right? They're supposed to sort of move in the general direction around the same time. However, when you have candles like this is when you know there's something going on here. So this is why I didn't want to sort of enter these trades at like that time. It's still not sort of giving me that confirmation with what I get when I sort of enter my A+ setups. So that was supposed to let you guys know in the comments if you guys were like, oh well, you knew it was going to break above, how come you didn't buy? Because of what was happening on ES, that's why I didn't buy. So if we go and continue again and go back to Nasdaq here, and we'll have a look at what happens. Yeah, let's just remove this out of the way. So you can see that the market has now pushed up. We then are entering a new day on Thursday, and we're expecting price to retrace and push back up, right? So then, yes, I did catch a trade on Thursday where I was expecting price to push back down here into this level, or even into the inverted fair value gap level, and then potentially to push up higher. What we ended up getting is that price just basically gave us a spike, and we rejected a little. We took something within this rejection, but this was not the main trade. There we have a nice tap within the inverted fair value gap at 10 a.m. guys, right when New York opened, sort of half an hour after. 10 a.m. candle tapped into this inverted fair value gap. You then buy, trying to attack these highs. Price then was attacking these highs. However, because of that S&T I showed you on ES, price just didn't go anywhere. It just fell back within the range. I already took obviously partials on this, but this wasn't the main trade that we were looking for. Then what ended up happening is during lunchtime at the PM session, price just went and pushed up towards the highs and then consolidated around the highs. Can you see how much liquidity we are building up here? This is telling you that price wants to break above these highs, right? Because this is a whole liquidity pool. But shame, because what happened is that price did break above this high right here, you can see, and then price absolutely came back down. This happened overnight. Now this supposed to sort of get people, in thinking that, oh, the highs are now taken, let's get into sells. But the thing is that we have so much support down here that, price will likely push back into this and push higher. It's not telling you that it's now in a sell program at all. Order flow is still bullish, right? If I draw this with an arrow, you can see that from here, we're going down, we push up, we go down, we push up, we pull back a bit more just to collect some liquidity. However, we're not, breaking very, very key lows. Daily fair value gap still holding, we push up, and we hold up here. We come back down to this level here, we push up. If price breaks below like these lows here, or closes below this inverted fair value gap, which means a bearish PD array is activated again. The bullish PD arrays will be holding a support here. So we also have a 1 hour fair value gap right there. So I'd be expecting for price to hold off this to push up, right? Why do I say that? Is because we have a final chance of support here. And if you look to the left, can you see this bearish PD array right there? Right? Bearish PD arrays will act as support when in a buy program. So whatever was pushing price down should hold a support. So can you see how price tapped into this, pushed down, tapped into this and pushed down? Price could not break above this 1 hour bearish SIBI, if you can say, or 1 hour fair value gap, right? So if we drag this across, price is broken above this, this should be used as support, so it becomes an inverted fair value gap, and that gets dragged across. You can see the wicks did spike just to retest this inverted fair value gap, and then price tapped and rejected of it. The same thing applies going forward, right? So now that price is taken at this high, I don't want price to close below here, and that's what I was using going into Friday, right? So now this is Friday's price action. As Friday starts to push down here, this is the London price action, and then we'll go 2 more candles over, and you can see right here is 8 a.m. If I drop down onto the 15-minute here, so you can see that I only trade after 9:30 open. A lot of people are saying that, yo, how did you not get involved on the 9:22 sweeper or something like that? How did you, hold back and not enter the trade? A lot of it is because of timing, right? It's time first, then price. Markets only move at certain time periods, right? After collecting liquidity. So you can see here that this drop here, right here, was right at the midnight open. Once the real true market, opening price opened, then price absolutely manipulated and pushed back down, right? We have accumulation here. Just prior New York, this is what happens. Price accumulates. Look at this consolidated price action. It's just moving back and forward. People are buying and selling within here, and they don't know what's about to come when New York opens. So we're just going to skip a few candles here. You can see here 9 o'clock. There we go. 9:05. We get a sweeper candle. At this point, price is tapped into my inverted fair value gap, but where is price? Is it in front of my blue line? No. So I'm not entering here. This is why a lot of people have entered right about here, because they see that, okay, there is a bullish fair value gap. Price is rejecting into this bullish fair value gap. It swept the lows. Now it's time to buy. What happens on the next candle? Okay. Oh, how come it's not working? Okay, yes, let's load up on the buys. Let's load up. We're going to the moon, right? And then what happens is that price pushes back down. 9:30 opens, and then it just absolutely takes them all out again. So now at this point, the people who got into buys are like, let's get into sells, right? Because this thing is not going up, we're going down, we're in a bearish trend. However, why are you getting into sells if price is still clearly, it's when that, when they're too zoomed in, they won't see the bigger picture, right? Because it's too zoomed in on the lower time frames. They've lost their trade because they got in at the wrong time, right? And then now they're just going to flip their bias and go to sells when it actually was truly bullish. And then that's when price sort of runs away after you've made a loss, right? And it's happened to everyone. It's happened to me before. However, once I start to figure out these key timings that I look at, right, and this SMT that I also look at, then it becomes very clear. So what I'm expecting is accumulation, manipulation, and distribution, right? So now you can see that we have accumulation over here. Now the manipulation has just happened, so I'm with this blue line just so you can see it. We've had the manipulation right there. Now with this manipulation, with price holding on this inverted fair value gap, I need to color this a different color. Let's go to red because it's nasty. And then we're expecting distribution, right? Which is going to be a green box. Let's just drag that out so you guys are following. Right there, you can see that we're expecting distribution. Where are we expecting distribution to? Not this buy side, sorry. We're expecting distribution to these key levels that we have, which is this level here, which is the London session high. Let's stop doing that. So that is one of the targets, London session high. And you may be like, wait, so why are you targeting London session high? Why not target the main high? The reason why I target like the session highs, because these are where London session traders who are selling are placing the stop losses above this high, and then you have the people who have been trading since Asia session have been placing their stop losses above the prior daily high. That's the key target, right? That's sell side. It's actually buy side, right? So at this point, notice how we have a 420 low and we have a 935 low, right? Let's just even use it on a higher time frame. If we go on the hourly time frame, notice how this low at 4 o'clock is lower, is higher than the current low that we put in, right? And I'm going to show you something. This here was SMT, And what was I using again to back that? I was using ES, right? We have a 4 o'clock low right there, and then you have the 9 o'clock low, which is there. You can see that price was actually moving inversely correlated to Nasdaq. So this was telling me that this low that we've just put in should not be broken because prices already breached those prices. However, on ES, they're protecting that low. So price should not break below this low on ES, and the same should occur on Nasdaq. So then that was my point, saying that, yo, we're about to get involved in this trade now. Let's see what we're doing. So then what happens here? So then you can see that we have all of this liquidity being built up. Okay, we have little short-term targets here, 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 and then we have a session target right there, and then we have a prior daily high target. So then with everything aligning, this is Friday. If you go to the hour time frame, you can see that price is in bullish order flow. It's not breaking or closing below inverted fair value gaps, you know. So this is all following my plan. And this is why when I go onto the 1 minute, with my timing now, price is in the key time frame to start looking for trades. We then mark up bearish PD arrays, right? Because when order flow will change, they will use bearish PD arrays as support. So you can see here we have a 1 minute fair value gap, right? If price is bearish, it should not close above here. It should continue lower, right? However, you can see that the light blue box below is the inverted fair value gap we are in, right? If I bring this across. So price has tapped into the point of interest. Now what we're expecting is we're expecting for price to break above the 1 minute fair value gap and for it to use it as support to push higher. This is our reversal zone. So then we're going to skip to the next 3 candles. You can see that price rejected down here. This is the sellers trying to get in, trying to continue that trade, but because price is in the POI and the drawn liquidity is higher and the timing is right, this is when we get the close above, right? I then wait, I believe, 2 minutes. You can see that the candle rejected back in. I did enter here, so we'll enter a buy here, and the stop loss would be below the 1 minute fair value gap. Don't worry about the risk. We go all in here when we're, you know, paper trading. You can see from here to there, and then our target at the time was the session high target. The reason why I wasn't targeting anything crazy is because ES is already actually, to be honest, on this trade, ES was in sync, right? You can see that we have the session high here, right? This is the session high. Notice if I go to the 5 minute time frame, just to make it easier for us to all to see. Notice how when price pushes up here, it still hasn't taken the session high at the same time. This is why this was becoming an A+ setup in my eyes, because ES and Nasdaq were sort of correlating at this time. They haven't taken out session highs at different times. Like ES has not just pushed up to take out the highs. Price is sort of dancing around here. If I just skip a few 5 minute candles, you can see that as price is pushing up here, it pushes up, it rejects, it then rejects again, and then pushes up, and then price takes out that high, right? When does it take out the high though? This is key. This is why I ended up looking to close the trade here, because at 10:10, right, price took out the buy side. Now let's look at 10:10 on ES. Can you see the cursor on the right side? 10:10 is here. What do we have? We have currently bearish SMT. Why? Because the price has already taken the high on Nasdaq, right? However, if it's correlating, then ES should be taking at the highs. But then what happened is price ended up showing bearish SMT, showing that the price may likely reverse from here, which is why I ended up taking, majority of the trade. Let's close this 46k, banging majority of the trade here, because I was happy with that, and that was the 1 to 3 trade setup right there. You can see that we ended up getting into this, and on the 1 minute time frame, if you monitor it, you can see after we closed above this fair value gap and it became an inverted fair value gap, this was an absolute sniper entry, because price did not want to go back into this area. Why? Because this is now a balanced price range. Price is now tapped in POI, it's now reversing. Where's the next level that price needs to go? Okay, the liquidity is above here. Let the market do its thing. It will continue flying. You'll get easy trades, nice clean trades like this if you follow this sort of, you know, follow the order flow, make sure the narrative is correct, and then price will go in your favor. What happened after a few minutes? There we go. Price took out the PDH. I wasn't too mad because I already made 3% on this trade. Happy done in 40 minutes. That is what, 2 weeks of someone's salary, probably even more. So that's all you need, and you probably need to do these consistently in order for you know to actually start seeing results. But it's one step at a time. And now, if you find anything useful from this video, please do mention it in the comments. If you want me to do more of these sort of trade breakdowns, let me know in the comments as well. Don't forget to like the video, subscribe, check out the link in the description for my free Telegram channel. And yeah, that's pretty much it. I'll be doing the weekly forecast now. It's been OASFX. Peace out.